All right. What is going on, everybody? Let me know in the chat that you can see and hear me okay. All right. Looks like we are firing on all cylinders. Let me get the slideshow pulled up. Okay, one more time. Let me know everything is working. You should see a big black screen that says the Black Swan Trade. All righty. All right, good deal. So the tech is working, slides are working. Before we do get started, I want to give everybody a quick reminder that because we are giving away a free copy of The Black Swan, I have it right here. It is signed by Nassim Taleb right on the front cover there, on the first page. Um, 1 second here. Okay. Okay. I'm ready now. Because we are giving away the free copy of the Black Swan book that is signed by Nassim Taleb. Please don't log out of Zoom. There are actually more people registered for this call than there are seats available on this Zoom call. So if everybody who said they were going to show up tries to show up, they won't be able to fit on, which means if you're on right now and you have to take a break for some reason, don't log out or else you might not be able to get back on the call. And just so you know that I get this question every single time. People are always suspicious that these things are not actually live. This is a screenshot of today's news sites and headlines. If that's not enough proof for you during the Q&A section, then you will know for sure. Right now, Bitcoin's at 74,873, gold's at 4808, silver's at 7936. So let's dive in. All right. For those of you who don't know who I am, my name is Joe Brown. I am a former stockbroker. I now make YouTube videos. I spent years advising the top 1% on how to manage their money. After I made enough money to leave that corporate world behind, I turned my attention to teaching regular people financial techniques that exist outside the mainstream. These are things that you would never hear from your typical stockbroker or financial advisor. After seeing just how much these techniques were improving people's lives, I decided to switch to doing this full time, which is why I'm so excited about what we are going to cover today. Because if you're anything like me or a normal person, you may be feeling a little bit confused, maybe even concerned or worried about the market. And part of that might be because you're not sure whether the market's about to collapse or whether it's about to soar higher. Many people recently have been getting caught off guard by surprising events that people didn't expect to see coming, like Trump's so-called preemptive strikes on Iran or him capturing Maduro, the recent spike or sudden collapse in silver and gold, the violent swings in oil prices. So I'm going to show you a unique strategy today that allows you to protect your portfolio from these types of events. This is called the Black Swan trade, and it's the best way that I know how to profit off of unexpected or surprise events. And in fact, this strategy was not invented by me. It's been used by some of the most high profile traders to take home some jaw dropping returns. Returns as high as 4,000%, 9,000%, even sometimes more than 100,000% in a matter of just weeks or months. And while I obviously cannot promise you that you're going to take home returns as high as some of these professional traders did, today I'm going to show you how you can use this strategy in your own account to set yourself up for some incredible returns. Because despite what most people think, this strategy isn't complicated. And it's certainly not just for the trading elite. And in fact, it's easy to get into these trades once you know what to do. And that's why I'm going to walk you through how easy this strategy is. And I'm going to show you how you can get into one of these trades starting today. Plus, I'm even going to show you how I've personally used this strategy to take home gains myself as high as 1,793% in 11 days using these types of trades. And I'll even show you how I've helped a small group of my subscribers take home triple and even quadruple digit returns themselves on their own trades, doing basically the exact same thing. Now, if you haven't seen this strategy before, you're learning it at the perfect time, because I don't know if you've noticed lately, but we have been drowning in unknowable or unpredictable, uncertain events. Things like what is set to happen with the US dollar, the unpredictable future of AI. And this is just a short list of some of these surprising events that we've seen over the last 5 years. And that's why on this call, I'm going to cover things like why I believe the rest of 2026 will be full of black swans and what I'm doing to prepare. I'm going to teach you why black swans can be both a bad thing and a good thing, and how you can use these trades to be ready for both the upside risk and the downside risk. I'm going to show you how you can use these trades to hedge your portfolio against a market crash or shocking geopolitical events while also setting yourself up for big returns. And we're going to go over what the differences are between black swans and gray swans, because they are different, and how you can potentially take home big profits on either setup. And then I'm also going to cover for you 3 potential gray swans that I see brewing in the markets right now. After all of this, we're going to be giving away a free copy of the Black Swan. It's worth a little bit over $400. I'm going to be announcing the winner to somebody who is on the call at the end of the call. That's where we're going to be pulling the names from. So if you want to have your name in the running to be pulled from random, then make sure you stick around to the end. Keep in mind, this might be the only time you'll get to hear about some of what I'm going to talk about today. And it's because we are entering what to me seems like a very weird phase of economics. And it's one where the global economic order is being rewritten. We could see markets soar. We could see markets fall based on who wins this struggle. Volatility is increasing in the markets. We've had more unexpected events happening more frequently recently in history. And in fact, people like Ray Dalio are saying that the old world order is now officially over. We're entering one of the most dangerous phases in the cycle of history. Mark Spitznagel, this is the man who runs Universe's hedge fund. This is Nassim Taleb's advised Black Swan fund. He's basically saying that the era of the Black Swan has just begun. Even Nassim Taleb is saying that markets right now are more fragile than any time in the last 30 years. And obviously, fragile doesn't mean broken, because there is the possibility of big breaks to the upside as well. But it's clear that markets and the entire global economy are balancing on a knife's edge. So preparing for a black swan now will put you ahead of the crowd. But if you wait too long, some of the opportunities that we're going to talk about today will probably be gone forever. I'll get to that in a moment. So first, let me answer some of the most obvious questions that come up when we're talking about these topics. The first one is, what even is a black swan, and how is it possible to make money on one when you can't see it coming? So let me introduce you to something called the dark trinity. Now, this is not dark because it's bad. This is dark because it is hidden or invisible. Some black swans can be good. It's dark because it's fundamentally unknowable. According to Mark Spitznagel and Nassim Taleb, in order for something to be a true black swan, you need these 3 things. The event is a surprise to the observer. The event has a major effect on the markets or a specific market. And then after the first recorded incident of the event, it is rationalized in hindsight as if it could have been expected. That is, the relevant data was available at the time, but it was just unaccounted for in risk mitigation processes. And that last bit is actually probably the most important of all 3 of these, because in order to be a true black swan, you could not have predicted the outcome based on all the available data, because even if you had all the available data, you didn't know which pieces were relevant. Those only become clear in hindsight. And while the idea that you can potentially make money from an unknowable event might sound crazy, it is absolutely possible. In fact, as I'm going to show you in a moment, because of the unique type of trade involved, it's a trade I'll show you how to do. Black swan trades have led to some of the biggest gains in history. So here's one of the most important points that I want you to take away from today's call, and that is that not all swans are black. Most swans don't meet every criteria of the dark trinity. They only have one or two. For example, a white swan might have a big impact, but it is very predictable. People see them coming, they prepare in advance. And these are things like the election of a president, tariffs, updates to the tax code. And then you move to the second category of swans, which is gray swans. These are things that could have been predicted in advance, but they just seem very unlikely or maybe even unimaginable at the time. It's just that most people fail to see the warning signs. These are things like the dot-com bubble, the 2008 financial crisis, COVID lockdowns. And when we look at a gray swan, we see that not only were there people who saw these crises coming, but they even predicted the exact mechanism by which they would happen. People like Peter Schiff, Michael Burry, Nassim Taleb, they were all big predictors of the 2008 financial crisis. Michael Burry didn't just predict that there would be a housing crisis. He went through all the AAA rated mortgage-backed securities line by line, read them all, and he found the exact time frame when most of these loans would start to go bad and start being defaulted on. He even sent out a letter to his shareholders saying that they would blow up in the later half of 2007. And he was exactly right. His big short against the housing market, obviously, in hindsight, everybody, he's famous for it, made him hundreds of millions of dollars in a single year. But it wasn't just him. Nassim Taleb actually did pretty much the exact same thing. In his book, The Black Swan, he wrote that the banking system was on the verge of experiencing a global collapse. And in fact, the Universa Black Swan Fund that Nassim helps run with Mark Spitznagel placed bets against the housing market. That made their firm $1 billion in 1 week. So the 2008 financial crisis wasn't a black swan, it was a gray swan. As Nassim Taleb himself put it, this crisis was perfectly predictable. It was just a failure of risk management. The system was fragile. You just had to look in the right places to figure it out. This is the same guy who is saying markets are fragile right now. And we are going to talk about some black swans in a moment. And I'm going to show you how profitable a true black swan trade can be. But as you're going to see, gray swans can be almost just as profitable, and they're a little bit easier to spot. In fact, even just getting in on a single gray swan event could potentially change your financial future. So let me show you what I mean. We're going to take a look at a gray swan event that happened during the lockdowns after COVID. Most people thought this was a completely unpredictable event. And that's because even though there were some obvious warning signs, a nationwide government lockdown did seem unimaginable at the time. One fund manager, though, Bill Ackman, realized that any government reaction to COVID could cause the markets to crash. But despite that fact, markets were still hitting all-time highs. And this was up until like February 17th or 18th of 2020. The market was still hitting all-time highs. So he placed a simple trade that would protect his portfolio. It would also have a chance to pay off big if the market did crash. And once the lockdowns were announced that they were going to happen, the market obviously started to crash. His capital management firm made a 9,969% return in just a few weeks. That turned his small $27 million starting stake into $2.6 billion. This trade was so profitable that some people call it the greatest trade of all time. And keep in mind, $27 million sounds like a lot of money, but it represented less than 0.5% of Ackman's fund's total assets at the time, which means it doesn't take a lot of money compared to the size of your portfolio to make a lot of money for your overall portfolio with these types of trades. I'll show you in a moment that you can get into trades like this sometimes for as little as $500, which pretty much makes them available to anybody with a decent sized trading account. But Bill Ackman's fund was not the only one who got the COVID crash right. Nassim Taleb also, once again, he predicted this almost to the letter. Nassim Taleb knew that a global pandemic was becoming more likely far earlier than 2020. He actually wrote about it in his book. He said the risk of an acute virus spreading across the planet was rising. And not only did he realize that a pandemic was becoming a greater and greater possibility, January 26th of 2020, he issued a warning about this specifically when the coronavirus, which is what it was called at the time, when it hit, he said that the correct government response, in his opinion, would be to kill it in the egg. He suggested travel bans. He suggested aggressive actions at the very beginning, not trying to lock down if and once it already had started to spread. But the media labeled Trump's travel bans as xenophobic. And at that point, Nassim realized that the political blowback from preemptive travel bans would be too big and that the government response, in his opinion, was going to be a disaster. So instead of ignoring the obvious warning signs, the Nassim Taleb advised Universafund placed a simple trade, one that would protect their portfolio if the market crashed, but also have a chance to pay off big. And that's exactly what happened. From the time they issued their warning until March of that year, the Universafund made a 4,144% return, just a couple of months. That turned their $100 million starting stake into more than $4.1 billion. Now, those seem like impressive returns, but you might be thinking, well, Joe, I don't have $100 million just lying around to place some of these giant trades. And that's a fair point. But like I said, these types of trades are not just for hedge funds or the wealthy elite or portfolio managers. So let me give you an example from my own account at that time. As the COVID crash was happening, I also realized there was a political incentive for a massive government response. If they didn't act, everybody would blame them for things getting worse than they should have been. But if they acted, they could always just say, hey, if it wasn't for us, then, things would have been worse. And if there are two things you can almost always bet on, it's for the government to act in its own self-interest. They're going to roll out any nationwide program in a completely incompetent manner. So I placed my bet. And even though I got into my trade late, I didn't nail the top of the market, I was still able to take home a 1,793% return in 11 days. That's enough to turn $1,000 starting stake into 17 grand, or a $5,000 starting stake into 89 grand, and a $10,000 starting stake into more than 179 grand, all from a single trade, all in less than 2 weeks. That's the power of getting into one of these trades at the right time. Now, gains like this are rare. And because of that, you need to be willing to lose money on trades, many trades, in order to take home big returns. So you should never invest more than you can afford to lose on any trade. And as I'm going to show you, the number of gray swans in the economy is starting to swell. For most investors, this is understandably a confusing time, but it is becoming clear that we are quickly approaching several tipping points in history. The global economic order is rapidly shifting. It feels like the things that used to be unimaginable are happening all the time now. Smart people are starting to say things that could get crazier still. While we've been promised that America is about to experience a new golden age, it also feels like pieces of the financial system are coming unglued and dissolving beneath our feet. At the same time, we also see trade wars, geopolitical chaos, potentially massive disruptions from things like quantum computing or AI, disruptions that we can't even tell right now whether they will be good or bad, or both, which means that the markets are more unpredictable than they've ever been. Nassim Taleb said, it's time to be schizophrenic. And I think that's a great way to put it, because we need to be prepared for the upside while still believing and preparing for the possibility of a complete collapse. Some people, as a result of this schizophrenic nature of the markets, are just going to sit on the sidelines in cash and miss out. And as I'm about to show you, learning how to profit from gray swans could be the key to protecting and growing your wealth in 2026 and beyond. The trick is just knowing how to spot them. And fortunately, I've developed a simple system for that. So let's go over that. I've used these trades to take home some incredible returns. I had a 733% return from the yen carry trade when that began to unwind, a 1,068% return on a gray swan in used cars. I've even taken home some big returns with MicroStrategy, trade on natural gas. And I've helped others do the same thing. It's not just me. These are screenshots from emails from my subscribers, 500% return in a little under a week, to helping people get their first 10x trade that they've ever had before over the course of just a few months, to even taking home thousands of percent over the span of a few months on an election trade. It's important. I need to caution you again. All investing comes with risk of loss, risk of complete loss. So never invest more than you can afford to lose. And you cannot expect to take home big wins like this all the time. In fact, you need to be willing to lose more often than you win in order to take home big returns. But as you'll see with these trades, it only takes being right once or even a couple times to change your life. Plus, once you know how the strategy works, spotting potential gray swans does start becoming easier and easier. We're essentially looking for three things here. Number one, we want something that is possible but seems unimaginable, or at the very least, very, very, very improbable at the time. This is called the perception to reality gap. And just like Michael Burry and Nassim Taleb, who were ridiculed for predicting a collapse before the 2008 financial crisis, we want to find events that are much more likely than people think they are. And when they do happen, they have a big impact on markets. Number two, we need to find an urgent catalyst. This is some sort of an event that could set things off. There's no point in making a trade if we have to sit in it for years. For example, Michael Burry didn't just know that the collapse was coming eventually, he knew the exact time frame. This sets him apart from other people, like Ron Paul was talking about that problems with the housing market all the way back in like 2002. So it sets him apart because he knew when this was going to start unfolding. We want something that has a high probability of happening soon so we can take advantage of it and not have to sit on it for years to see if it ever does happen. Third, we want a uniquely cheap way to get into the trade. Just like Bill Ackman only needed to bet 0.5% of his fund's entire portfolio to take home that big return, we also only want to make very small bets that have chances to pay off big if we are right. We're talking about something that allows us to bet pennies chasing $10 bills. As Jamie Mai, he was somebody who took home an 8,000% return during the 2008 financial crisis, put it, we want tails, I lose a little, heads, I win huge opportunities. I'll show you how to find these types of trades in a moment, including how I use this strategy to take home $500,000 in 9 months on a single trade. And while those results are not typical, so again, never invest more than you can afford to lose. I'm even going to show you my win-loss rate over the last year and my performance over the last 5 years as a result of using this strategy, just so you know I'm not holding anything back. But first, let me cover 3 potential gray swans that I see in the market right now. Now, some of what I'm about to show you will seem unbelievable at first. That is the nature of these types of trades like 2008 or COVID. Most people don't see them coming. Most people ignore the warning signs, which means most people miss out. And as I'm going to show you in a moment, the key is to right size your position. Just like Bill Ackman, just like the Universa Fund did with COVID crash, we want to position ourselves and manage our risk with position sizing so that we only have to risk a little bit of money for these shots at massive returns. And remember, just because something only has maybe a 1 in 10 chance of happening, if the payoff is 50 to 1 or almost 100 to 1, like the Bill Ackman example, that is a very good bet. In the words of Jeff Bezos, if you have a 10% chance of 100% payoff, or no, a 10% chance of 100x payoff, you should take that bet every single time. You only have to be right once or twice in your lifetime to change your financial future for good. And while I obviously cannot promise that you'll take home 100x returns from the gray swans that I'm about to detail for you, the more mispriced they are in the market, the bigger your potential return could be. And that's why as I lay each of these potential gray swans out one by one, I don't want you to ask yourself if they're probable or how likely they are. Instead, ask yourself if they're possible. Is this something that the mainstream might be missing, that the consensus might be overlooking? Is this something the market has failed to fully price in? And if so, depending on the type of trades available, that may mean we have a good bet. So let's cover the first gray swan I see unfolding in the market right now, and that is the great schism in AI. Now, you've probably heard about a brewing bubble in AI. In fact, over the last year, you've probably seen headlines like this one, claiming things like the AI bubble is now 17 times larger than the dot-com bubble, or that the financing around AI is just one big Ponzi scheme, where NVIDIA is investing in its competitors are buying chips back from them, which means their revenues are just being round-tripped in what some would consider a sophisticated form of accounting fraud. In fact, because of that, they're likening it to Enron, saying that the AI bubble has gotten so big that NVIDIA literally is the next Enron. We've seen people like Jeremy Grantham, he's a man who once oversaw $118 billion in assets, say things like, this is obviously a bubble. The chances that it doesn't pop are slim to none. Billionaires like Stanley Druckenmiller and Peter Thiel have been selling off their Nvidia shares and their Palantir shares. But what I'm about to show you is that some of this fear, not all of it, some of it has been massively overblown, which has created a huge opportunity for those who know what to do. While people love to scream about OpenAI's negative cash flow, which is real and a problem, or how Anthropic could go bankrupt if it isn't able to 10x its business every year, which is real and a problem, there's an even deeper story going on in the background that's being overlooked, and it is one that could mean some tiny AI companies are actually right now a value play, which means there is a big perception to reality gap, like we talked about earlier. And the gray swan here is to run exactly opposite of the fear. When bubbles peak, they follow a similar pattern. Peter Lynch outlined this in his book, One Up on Wall Street. It goes like this. At first, nobody at the cocktail party even cares about the industry in question. It's boring, it's far off. Then you start hearing whispers and rumors and mentions of it at parties, but it's still no big deal. Then suddenly the crowd gathers around experts. They're grilling them for advice. And then after that, you arrive at euphoria. This is where non-experts are giving you tips. Finally, you end up right back at no one cares again. And that appears to be what happened with the AI bubble, but not the way that most people think. You take a look at this chart. This is the Google Trends chart that shows the number of people searching for the term AI bubble. And as you can see, it peaked sometime last year already and has already started to completely fall off, which is a good indicator that instead of a bubble in AI, we may be at the tail end of a bubble in the fear of an AI bubble. If you don't believe me, let me show you another chart that highlights this has happened before. This is the Google Trends chart for the term Bitcoin bubble. It peaked in 2017. There is peak Bitcoin bubble fear. And well, here's the price of Bitcoin today. And you can see that, yes, the price of Bitcoin did fall, but it was nowhere near the top, especially when you zoom out. And I think that is the exact position that we are in with AI today, and it's going to catch a lot of people by surprise. Look, I'm not saying that there are not some big AI stocks that are not going to fall. I think there are some big players that could be in a lot of trouble. They're taking on a ton of debt. They're burning a ton of cash. And it's been reported that for every dollar OpenAI makes, they have to spend at least $3. Palantir might be one of the most overvalued stocks in history. They have a forward PE ratio of over 100, which means that if you bought this stock today and they continue to grow their earnings at the pace the market expects, it would still take more than a century for you to make your money back. And that's their forward PE. If you look at their regular PE and they continue to make the same amount of money they're making right now, it would take you 200 years to make your money back. And to be fair, these kinds of stocks do make up a big share of the overall market, like the S&P 500. So there is massive risk here. But despite popular opinion, in some stocks, much of this risk of a crash may have already been priced in. Let me show you what I mean. If you take a look at this chart, you can see that there are many big name AI stocks trading at very average forward PE ratios. NVIDIA, the poster child of the AI bubble, is at the middle of the pack. It is trading like a value stock compared to its sales growth. Some are even priced well below where they should be. Micron Technology has a forward PE that floats between just 4 and 7. So even though by some estimates, it's projected to have a 600% plus EPS growth over the next year, which means its growth potential is not priced in, it is massively undervalued. But it's not just moonshot stocks. If you take a look at a company Amazon, it is uniquely positioned to take advantage of AI. Not only do they have infrastructure like data centers, custom chips, AWS AI services, but they also have multiple direct use cases within their own company. They have shopping assistants like Rufus that are already generating revenue. They have operations and logistical AI. And most importantly, they have robots inside their warehouses. In fact, Amazon is replacing people with robots at a staggering rate. You can see that even though the hiring of people, of humans, is flat or even down over the last 5 years, the employment of robots has been rising exponentially, which means, love it or hate it, over time, Amazon's cost of production, especially because of reduction in wage cost, is only going to fall. And this is a company that has built a logistical infrastructure moat that nobody can touch for at least 1 decade, probably more. So what about Amazon's PE ratio? I mean, it's not really a value play unless it's relatively cheap, right? If you take a look at this, even though since its inception, Amazon, that was in 1994 when it IPO'd, Amazon has had an average PE ratio of 99. And even if you just look at their median PE ratio, it's valued at a PE of about 77. Right now, it has a PE ratio of 33, which means even though the stock is poised to be as profitable as it's ever been, as far as its valuation goes, this stock is almost the cheapest it has ever been. This is one of the clearest signs that the great schism is starting to form in AI, where we have the overhyped, insanely expensive PE ratios of companies like Palantir, even Tesla, and we have underlooked value plays like Micron and Amazon. And while you could do well investing in these, and a lot of the companies that I mentioned today, just full disclosure, I do have positions in. Here's the truth. Gray swan trades are not about targeting 100, 200% returns. It's about finding ways to bet pennies, chasing $10 bills, which means if we position ourselves correctly, we set ourselves up to do a lot better than a double your money play, which is great on its own, but we can do better. I believe I have what is the perfect investment for that. And it's one that allows you to leverage this great AI schism to take advantage of both the upside and to take advantage of the downside in the AI market. And I'm using it to target returns as high as 600% as this great schism unfolds over the next year. But you may not have long to act. And here's why. The perception to reality gaps are vital for making a gray swan trade work. Once that gap snaps shut, it is often too late to make any real money because that profit potential has been priced in. And the likelihood that some of these stocks stay undervalued is shrinking by the day. That's because over the next 2 weeks, in some cases as soon as tomorrow, these companies are projected to release their earnings reports. And if we get any surprises to the upside for any of the companies that I've mentioned, or the 6X play that I'm looking at right now, it might be too late to get into this trade for the big upside. So if you are interested, the best time to get in is now, and I'll show you how to get the details on those trades that I have lined up for tonight in just a moment. But first, let's talk about the second gray swan that I think you should be looking at right now. And this gray swan is America's debt reckoning. You've probably heard that the US is facing a sovereign debt crisis. I've said this many times. You've probably heard that we will eventually lose our reserve currency status. I've said this many times as well. You've probably even heard that Warren Buffett is now echoing this concern. He even gave a big warning about the US dollar right before he decided to retire. But what you might not understand is why. Why is this crisis so inevitable? Why does a crisis like that, what does a crisis like that even look like? That's a good question, because this crisis will look a lot different than most people think it will, even if they're expecting this crisis to unfold. Most people understand that as the world's reserve currency, America can just print money at will. It can run up massive trade deficits, never actually having to pay for the goods that it receives abroad. It can borrow money at low interest rates, never has to worry about paying off its ballooning debt, never has to worry about correcting any of its financial problems at all. But here's what most people don't realize. Because most transactions in the world are denominated in dollars, because it's the world's reserve currency, most of the world's debt is also denominated in dollars. Global dollar-denominated debt. This is debt borrowed in dollars from countries, companies, organizations, individuals, sits at a mind-blowing $208 trillion. To put that in perspective, that's over 10 times the value of all the companies listed on the NASDAQ. It's nearly twice the size of the entire world's GDP. This is where that privilege of owning the global reserve currency becomes a curse. Because in order to maintain its position as the world's reserve currency, America is required to continue to print money and provide the liquidity to service this debt for the rest of the world. Now, if you're having trouble picturing the full scope of this problem, think of it like just a game of musical chairs. If we only look inside the US, there are about $21 trillion in the US financial system. There's about $70 trillion of debt inside the US financial system. So that's the national debt, corporate debt, household debt. If we take that same ratio and apply that to the rest of the world, knowing there's over $200 trillion of dollar denominated debt around the world, that would mean there's only about $50 million in actual liquidity or less to support all that debt around the world. And the reason why we're estimating here is because, which is another problem, there is no visibility into what the real number really is. There's no Federal Reserve that sits on top of the global financial system, which means this liquidity to debt ratio could be even worse. During good times, as long as the music is playing, a small trickle of money is all that's needed. This provides enough liquidity for people to pay out their dollar denominated debts, keep the game going as the debt and the dollars shift from one player to the next. But when a crisis hits, everyone needs to get their hands on dollars all at once. And if they don't, they risk defaulting on their own debts, which means that the next person in line can't get their hands on dollars and they all start scrambling for the disappearing chairs before the music stops. If there aren't enough chairs, we will face a global liquidity crisis that happens very quickly. And as the world's reserve currency, our job is to make sure there are always enough chairs. This is the real reason why, after every single global financial crisis, the Fed's printing presses run red hot. We're not just bailing out ourselves. We're making sure a deflationary death spiral of debt defaults doesn't start spinning out of control around the rest of the world. And we are sinking deeper and deeper into debt ourselves in order to do that. This problem is known as Triffin's dilemma. And as you probably see here, it's a catch-22. On one hand, we have to keep printing money to avoid that liquidity crisis. But on the other hand, we're going to go bankrupt eventually if we keep on doing it. Economist Robert Triffin is the one who this is named after. And he put in his testimony before Congress, if we stop printing, the world could face a global liquidity crisis. If we don't stop printing, the dollar will no longer be accepted as the world's reserve currency. Now, this is why Doge and Trump's tariff plans were doomed to fail from the start. This is why cutting spending makes the bond market go crazy. This is why guys like Nassim Taleb are saying that the US is in a death spiral. He's saying we need some kind of miracle to stop this. We have guys like Ray Dalio saying we only have a few years to figure this out. We have to run up the trade deficits. We have to keep spending. The money flow can't stop or everyone will quit using dollars. But at the same time, if we do keep doing it and spending money like this and printing money like this, eventually everyone will quit using dollars. And if we can't figure out this dilemma soon, we could face a global liquidity crisis on an unprecedented scale. In fact, the tipping point for that may already be here. But what is the urgent catalyst? I'm going to show you 3 things that I believe could set this off within the next year. Media does not like to talk about this, but America has already slipped into a technical recession. This happened in 2022 when GDP contracted for 2 straight quarters. They later went back and revised this, but they like they like to do their work their magic on economic numbers. And if you recall, a big reason for that downturn was the war in Ukraine, which set off an oil price shock that dragged the economy downward. Sound familiar? Oil prices have already hit the same levels we saw back in 2022. You've probably also already felt some of the pain at the gas pump. This is a pain that energy analysts are saying is not going to be able to go away anytime soon, regardless of how quick and complete the resolution with Iran is. But that is nothing compared to the damage that's being done to our economy. Moody's chief economist has already warned a recession will be hard to avoid if oil prices stay high for even a few weeks, and history's not on our side here. The most serious U.S. economic downturns were preceded by a spike in energy prices. That includes 1974, 1981, 1990, 2001, and 2008. In short, there is a good chance that if the U.S. slips into a recession again this year, or there is a good chance that the U.S. does slip into recession this year. And if that happens, Washington will do what Washington always does, which is spend more, stimulate more, borrow more, print more. And if a recession really does hit, that number could go much higher. Only this time, with our debt load already stretched to the limit, that response could force the market to start repricing America's debt and dollar much more aggressively. And if that sounds extreme, just look at what happened to the UK back in 2022. After the oil shock from the Ukraine war, Prime Minister Liz Truss tried to pass a so-called growth plan that was built on borrowing and lower taxes, and immediately the markets revolted. The pound collapsed nearly 10% in just a few days, an absolutely titanic move in currency markets. Long-term UK government bonds got crushed, which sent yields soaring by 1.6% in just a few days. Now, that might not sound like much, but for supposedly safe government bonds, this was a bloodbath. In a matter of days, some of those bonds lost roughly a quarter of their value. This is what happens when the market suddenly starts questioning what a government's debt is really worth. In the end, Truss was forced to resign from her post, which earned her the dubious honor of being the shortest serving prime minister in British history. And the same thing could happen here. All it takes is one recessionary shock, one big jump in deficits, and one moment where investors stop treating America's debt like it's untouchable. But even if we avoid that trigger, there's always another way that this reckoning could begin. Politically motivated or not, or if it was just a policy blunder, it doesn't matter. The fact is that Yellen left the Trump administration a $9.2 trillion debt bomb that is currently coming due, one that has to be, we'll say, diffused or rolled over within the next 9 months. During COVID, instead of locking in rock bottom long-term rates while rates were low and the US government borrowing its debt at the 10-year, 20-year, 30-year timeframes, most of the national debt was rolled over into government debt instruments that were shorter-term loans, mostly T-bills, with a 2-year expiration date. She thought the 0.5% that she was saving by doing that was worth it, and maybe she thought there wasn't enough demand for the longer-term debt. Maybe she thought interest rates would stay low for much longer, so it wasn't a big deal. Take the cheap now and then rolled over before it gets more expensive. But here's the problem. It's not the way it worked. Interest rates started to spike very quickly, trapping the US government in short-term debt with interest rates skyrocketing. This is the amount of debt the US government needs to refinance this year. If it can't, the cost of servicing the US debt is about to skyrocket. But it gets even worse. As Ray Dalio put it, we have to sell a quantity of debt that the world is not going to want to buy. And he's exactly right. We're already starting to see this strain. US bond auctions are starting to falter. We've been stuck rolling over short-term debt, and every time we try and issue long-term debt, the auctions don't go well. In fact, the Treasury just had to buy back $15 billion of its own debt. This was the biggest buyback in history. With $9 trillion of debt coming due this year, that's a drop in the bucket. It's clear there is not enough demand at the long end of the curve, which means the only way to keep this machine running is to continue to roll over the short end and pay higher and higher yields. But that's how the death spiral begins. Higher yields means higher interest costs. Higher interest costs mean bigger deficits. Bigger deficits mean more debt. And more debt means more pressure on the market to absorb it, which they won't do unless we pay them higher yields, starting the cycle all over again. That's why some of the biggest names on Wall Street are warning that we're reaching a breaking point. Jamie Dimon himself has said that a crack in the bond market is basically inevitable. And with everything going on right now, this could start anytime. And that brings me to the third thing that could make this debt reckoning hit all at once, which is downgrades. In May of last year, Moody's already stripped the United States of its final AAA rating, and it warned that America's debt burden and interest costs had risen to levels far beyond those of similarly rated countries. And if debts and deficits continue to keep surging, another downgrade could be the thing that finally tips this whole system over. And that downgrade may be closer than most people think. Did you know in AAA rated countries, the percentage of government revenue being spent on interest cost is 1.6% on average? For the US, we're spending 20%, over 10 times higher. To put that in perspective, this ratio is much closer to countries like Ghana than it is to the world's safest borrower. 1 out of every $3 of federal income tax now goes towards interest. Let me say that again. For every $3 the government takes from you in taxes, they're spending a full dollar of that just on the interest. And if you think, wait a second, they're not spending that much of all of their spending on interest. That's right, because they're borrowing the rest, which is like using a credit card to pay the minimum payment on another credit card. That's what the government is doing right now. We're spending more on servicing interest than we do on defense and Medicaid. The worst part is interest costs are only headed higher, which means that in the coming months, we could easily see another downgrade or a wave of downgrades hit US debt. And that could be the moment the markets start repricing everything: debt, dollars, stocks, all of it. The scariest part is all three of these catalysts could happen right around the same time. We could get a recessionary shock from the war, crack in the bond market as Treasury scrambles to refinance $9 trillion, another downgrade of US debt, a catastrophic trifecta that looks more and more plausible by the day. So, how do we protect ourselves? What is the best way for us to risk pennies chasing $10 bills? The important thing to remember here is that there's always a way to make money. Even if the world starts dumping our debt, even if the dollar comes under pressure, even if the market begins to reprice all of it all at once. And in fact, I have a very counterintuitive way to do it, because when this kind of debt panic hits, as I showed you, it starts with a liquidity crisis, not the hyperinflation that guys like Peter Schiff claim. We've already started to see the early signs of it with the latest war scare and the oil shock. Gold sold off, silver sold off, treasuries sold off. But in every single crisis, there's also an opportunity, and a liquidity crisis is no different. In fact, a couple of years ago, we saw a big liquidity crisis when the yen carry trade was starting to explode. This type of trade allowed me to take home a 733% return in just a couple of weeks. But I think we could be heading for something much bigger, and so I've found the perfect way to play it. I'll show you how to get all the details of that in a moment, but first, let's go over the third gray swan that I'm watching right now. This is America's silent civil war turning hot. Now, this is important. I need to clarify, I am not talking about a rank and file war here. Not talking about where we have soldiers lined up on one side or two sides of a battlefield. Not talking about where California is trying to send battalions in to invade Texas. That's what most people think of. But what I'm talking about is something that is much easier to imagine. In fact, we've already seen small scales of this happen. And this is why I believe that a big perception to reality gap exists here that the market has not priced in. Since COVID-19, and maybe since a little bit before, America has been having what I like to call a silent civil war, because this is an ideological war that is being waged through the media, through the court systems, and in the arena of politics. You saw all the division during the last election. Half the country saw Donald Trump as a criminal and a dictator. The other half saw him as a savior and a hero. And that division is continuing even more now. As we speak, some right-wing politicians say that they're literally at war with left-wing lunatics, or that we are in a new cold civil war right now. And we have left-wing figures saying we've entered a new age of authoritarianism, that we live in a fascist police state now. With elected representatives openly encouraging Americans to shut down cities and fight each other in the streets, it's hopefully understandable that it's tricky for me to talk about politics. People want me to take a side, but as somebody who leans very libertarian, maybe even past libertarian, I mostly wish that politics, and especially politicians, would just go away. I'm against war, taxes, and anyone that wants to tell anybody how they should live their life and violate rights. Sometimes I think we'd be better off without somebody who had a monopoly on violence. But the unfortunate reality is that regardless of where you fall politically, the decisions that are made by the government will actually affect us and our money. In fact, the political situation at home is a powder keg, and it is waiting to blow. And it could come to a head much sooner than most people think. With everything going on right now, from the war in Iran to the situation with the dollar, I know it's hard to decide what's important to focus on. So I'm going to show you how to prepare for oil shocks and geopolitical fallout in a moment. But here's a good rule of thumb. Treat politicians like magicians. They use distraction, they use sleight of hand, and they want you to look left. And when they do, you should look right. Once you do, you will see we are heading for an impossible dilemma on, or as I'm about to show you, potentially much sooner than the next upcoming elections. Because there are only two feasible paths during this election cycle for the midterms, and they both end ugly. On one hand, Democrats could win the House and maybe even the Senate during midterms. And in fact, according to Polymarket, that is actually the most likely scenario right now. And if they do, they will move to investigate, maybe even trying to impeach Donald Trump. They've already said as much. They're promising to investigate him, his family, his associates. And while removing him from office through impeachment will be hard, their goal is to tear him apart. They don't actually need to impeach him if they can force him to resign. They want him to cut a deal and leave forever. Look, I'm not saying whether this is a good thing or a bad thing, whether he deserves it or not. I'm just saying what is likely to happen here. Here's why this matters to you. Another US president was offered this exact same deal. When Richard Nixon was faced with Watergate, he chose to take a pardon from his vice president and resign rather than face potential legal action. But here's what most people don't realize. The exact day the Watergate trial was announced against Nixon, the markets began to fall. Not when he resigned, not when the evidence became clear. The exact day the trial was announced, the market plummeted. And they continued to plummet nearly 50% over the next 2 years. That's why Democrats are already getting the articles of impeachment ready right now. If there is a credible way to indict Trump, they can run on it. People might vote for them just so that Democrats can investigate and push the indictment through. Remember, the markets fell when the trial against Nixon was announced, not when it was concluded. That's why the best time to prepare for this is right now. I'm going to show you how in a moment. But the second scenario could be even worse, because if the Democrats somehow lose the midterms, it could ignite something even worse than a market crash. In fact, we could see riots in the streets, even the potential for martial law. I know that sounds extreme, not trying to get political here, but the groundwork has been laid for a while now. Democrats are already saying Trump is going to try and rig or even steal the 2026 elections. Even Gavin Newsom is using this type of rhetoric. And to be fair, Trump has given them plenty of reasons to think that this might be true. He's threatened to nationalize the elections. He's suing both red and blue states for access to their voter data. His former strategist is even saying Trump should send ICE to the polls. Regardless of what you think of any of this, whether you support Trump or not, this is now what many Americans are coming to believe. And with every indicator pointing to a Democratic win in 2026, from the polls, the betting odds, and history, what do you think happens if the Democrats somehow lose? What do you think happens if they feel like all their worst fears have been realized? What do you think happens if Trump actually does send ICE to the polls? It's not going to be a pretty picture. We could see protests, riots, even martial law. That's exactly what happened in 2020, by the way. Most people just forget how fast the fear and uncertainty spread after George Floyd's death. Within 24 hours, protests erupted around the entire country. Within 36 hours, the riots began. Parts of Minneapolis, Indianapolis, and Atlanta looked like a literal war zone. And just 12 hours later, the National Guard was deployed and martial law was declared. Within the week, violence and looting had spread across the entire country. People were assaulted, businesses were vandalized, police stations were burned, and over 1,200 people were arrested just in Chicago. Within 14 days, rioters surrounded 6 square blocks of a neighborhood in Seattle, Washington, and established their own autonomous zone. I don't know if you remember this. News from that time was crazy. Local police fled the area, and it was more than 3 weeks before they were able to take the neighborhood back. We had mass violent protests, autonomous zones. If the idea that something on this scale could happen again still seems crazy, remember, when there's political tension like we have today, it's almost never just a slow buildup where violence is expected. The tension, it's like an ebb and a flow, and suddenly everything breaks out all at once. That's what happened before the George Floyd riots. That's what happened during the Ferguson riots. That's what happened before the Capitol riot on January 6, 2020. And it even happened before the actual American Civil War in 1861. Most people during the actual Civil War at that time were in complete denial that actual violence was a possibility. In fact, Henry Adams, the grandson of John Quincy Adams, said, "Not one man in America wanted the Civil War or expected or intended it." And even though political tensions had been rising, the idea of a war still seemed so ridiculous that just before the fighting began, James Chestnut, who was a senator from South Carolina, joked that he would drink all the blood spilled in the entire conflict. Now, obviously, he was joking because his idea was that he wouldn't have to drink a single drop. And in fact, most people were in complete disbelief until the moment where the first cannons were fired on Fort Sumter. And again, I'm not claiming we're going to have an actual civil war like this. But if that amount of cognitive dissonance was around just before the bloodiest conflict to ever take place on US soil, something like George Floyd Part 2 should not be unimaginable. In fact, the early warning signs are already here. We've seen everything from people ambushing federal facilities, broad daylight assassinations of CEOs, politicians, political activists. We saw the killings of 2 American citizens by federal authorities, which caused protests in Minnesota so large that Donald Trump was threatening to invoke the Insurrection Act. Now, with the stakes higher than ever going into a new election cycle, we could see something much bigger than anything we've seen before. All the anger, the paranoia, the tribal hatred is already there. The fuel has already spilled all over the floor. And the midterm elections could be the match, that urgent catalyst that could light that fire. And it doesn't even matter which side ends up winning, because both scenarios could set off the powder keg. That's why, in addition to hedging your portfolio against market chaos, I've also found a trade that could soar specifically during times of mass civil unrest. In fact, in 2016, when Hillary was ahead on every poll, this stock started to fall because people weren't worried about civil unrest. But the moment it was clear Trump was going to win, the stock ripped higher. And it wasn't just 2016 either. In 2024, the exact day Trump's victory was announced, this stock absolutely crushed it. And this time, I think it could soar even higher. In fact, using my strategy, I'm targeting a little over 1,000% return over the next 8 to 10 months on this trade. I'll tell you how that's possible, how to get the details on that in a moment. But these trades are not just about profiting from the downside. You can use them to play the upside too. Like I've said, I've been using these kinds of trades to take home some big returns in my own account over the last few years. Gains from a few 100% to several 100% to even 1,000% or more. In fact, I was even able to take home $500,000 in 9 months on one single trade. And while this was obviously an outlier trade, and it is not typical, so you should never invest more than you can afford to lose, it just goes to show that it only takes spotting one big trade to potentially change your life. In fact, after sending these trades out to a small group of subscribers for more than a year now, that is exactly what some of these trades have done for a small group of people. I'll show you how you can join these people in a moment. But first, let's talk about the most important reason you're here today, the Black Swan trade. You see, this is one of the most little known and powerful trading strategies in the market. And that's because it is a very cheap trade that gives you a shot at a very big return. And in fact, when you get the timing right, these trades can make thousands of percent, sometimes even overnight. For example, just before the 1989 Black Monday crash, Nassim Taleb realized that the market was not pricing in the potential for any crash at all. In fact, as he put it, the trade was so cheap and the payoff was so great, he didn't even have to worry about what the odds were. And by placing a small trade, it's a trade I'll show you how to do, he made a fortune when the market turned. In fact, some of his positions exploded 170,000% overnight. That was enough to turn every $10,000 he invested into $17 million. And while a 100,000% plus return is probably a little out of reach for regular investors, taking home 1,000% plus returns is completely possible. In fact, some of my subscribers, people who have used this strategy that I'm going to outline for you now, have done just that, from a 2,000% return on an election trade to a 4,000% return as the markets crash. To put that in perspective, a 4,000% return is enough to turn a $5,000 starting stake into 200 grand, or a $10,000 starting stake into 400 grand. And again, I want to caution you, all investment comes with risk of loss, risk of complete loss. So you should never invest more than you can afford to lose on any trade. And these results aren't typical, so you cannot expect to take home winners like that most of the time. But all it takes is getting it right just once to change your financial future. Here's how it works. First, just like a gray swan, we want a massive perception to reality gap. In fact, despite the many risks in the economy just before the market crash in 1987, stocks were again trading at or near all-time highs. Some people took that as a bullish sign. Nassim Taleb realized it was the perfect opportunity to prepare for Black Swan. As he put it, unless you're hedged against something like Black Monday, whatever alpha you think you're going to get, you're not going to get. As you'll see, that may be the exact situation we're in now. Second, we want many potential urgent catalysts. You see, this works a little bit differently than a gray swan because in order to be a true black swan, you need three things. The event has to be a surprise, it has to have a major effect, and it could not have been predicted in advance. In other words, there's no single urgent catalyst you're watching and waiting for, at least not a catalyst that you could reasonably predict. But the more potential catalysts we have, the more likely we are to get a big payoff. And as I've shown you today, we are sitting on top of several urgent catalysts, and that wasn't even close to an exhaustive list. These are the ones that I whittled down to show you today. In fact, that's exactly why Mark Spitznagel is saying that right now, the US is really susceptible to black swan events. Nassim Taleb is saying the market is in a more tenuous position than it was right before COVID. And if you take a hard look at what is going on in the world right now, from tariffs to the war in Ukraine, riots in LA, you can see he's exactly right. But despite that simple fact, the market is still trading near all-time highs, which means just like Nassim Taleb in 1987, this may be the perfect time to act, which brings me to the final point that we want a uniquely cheap way to get into the trade. In order to make this trade work, the trade has to be as cheap as possible relative to its potential reward. With this trade, we're not looking for a 2x, 3x, 4x, 5x, or even a 10x opportunity. We want something that has the potential to shoot up thousands of percent or more during a big market move. Fortunately, I believe I have found the perfect play. Most people think that a black swan trade is a bet against the market. That's not entirely true. What you're actually betting on is volatility. As Nassim Taleb said, what most people don't understand about that trade is that I was actually betting on volatility, which means if the market does nothing, he loses little. But if there is a big move, he wins huge. And while there are plays out there that do allow you to do this, things like betting on volatility indexes, strangles on things like the S&P or the Russell 2000, I've found something I believe could perform even better. This is a play that is designed to take advantage of a geopolitical black swan. You don't need me to tell you that things in the world are crazy right now. We have collapsing currency, wars breaking out. As Ray Dalio said, we are now living in the changing world order and that the global breakdown is inevitable. So it's only a matter of time before it all comes to a head. By setting up a hedge in place right now, if the worst breaks out or if we see something like World War III, you'll be well positioned to take advantage of it. In fact, I did something very similar a few years ago. At the beginning of 2022, I was warning that China could invade Taiwan. I made an entire YouTube video about it. I explained, hey, China just took Hong Kong. They might not be shy about doing the same thing to Taiwan. I actually caught a ton of flack for it on this video. In the comment section, people were saying things like, I don't think you have an actual grasp on the situation. Or you'd be more likely to see nuclear war than making money on shorting Taiwan. Or they were taking the opposite side of the trade, going long Taiwan and Russia. Here's what I knew most people didn't realize. It didn't matter what the actual threat was. What mattered was that the market, specifically the Taiwanese stock market, was pricing in zero risk at all of any threat, period. The Taiwanese stock market was hitting all-time highs. Any news that China might be gearing up to make any move could send their stock market plummeting. I even recommended getting into a special type of trade on EWT at that time, one that would increase in value as the Taiwanese stock market decreased in value. And that is exactly what happened. Once the headlines did begin to hit that there was at least some risk, the Taiwanese stock market started to plummet. And anybody who had placed a simple trade the day my warning went out could have taken home a 478% return in a little over 10 months. To put that in perspective, that's enough to turn a small starting stake of $5,000 into more than $28,900, or a $10,000 starting stake into almost $57,800. But that was in 2022, and I believe my new play could lead to far higher results. And note, China never actually had to invade Taiwan for that trade to pay off. The threat just had to grow. That's why I like to think of this play as a geopolitical disaster insurance trade. It sets you up well for a worst case scenario. In fact, with this black swan trade and the 3 gray swan opportunities that we talked about today, I believe you'll have everything you need to protect your portfolio and give you the best shot at taking home a once in a lifetime return. I'll show you how to get the details on these trades in a moment. And I'm even going to give you a way to download video instructions complete with entry prices and exit prices. But these 4 trades are just the beginning. What we've talked about today is really just the tip of the iceberg. Black and gray swan trades are simply one category in a much larger universe of investments called asymmetric trades. These are trades where your risk is limited, but your potential upside is massive. We're talking about plays that you can get into for sometimes as little as a couple $100, but have a 5x or a 10x or even sometimes a 20x potential profit potential in a matter of weeks or months. After sharing my research on these asymmetric trades with a small group of people over the last year or so, the results have been incredible. These are unsolicited emails that my members have been sending me, screenshots from them. People have asked me to continue to keep sending these trades. They've said they've taken home the biggest single win of their life. You see here, first 10 bagger today, 368% return, 1,175% return. Just incredible. Even though, this is a disclaimer, even though you tend to lose more often than you win on these types of trades, when you do it right, the amount you win on your winners should far exceed the amount you lost on your losers. My win rate is typically very low from year to year. And the win rate is defined as the number of trades that you win versus the number of trades that you lose on. But the winners, when I do have a trade that is profitable, it is big enough that it has helped me to generate insanely high portfolio returns for my overall portfolio. I've averaged 36.4% total portfolio return for the last 5 years. This is the compounded annual growth rate. That includes all my winners, all my losers, everything. That's triple what the market indexes have done over the exact same time frame. And I've helped others do exactly the same thing. This is a screenshot from one of my subscribers, helped them triple their entire trading account in under a year. This is a screenshot from one of my subscribers. He 5x'd his account in less than 2 years. This is another screenshot from one of my subscribers. He 8x'd his account in a single year. And again, past performance, no indication of future results. As you can see, an 8x return is enough to turn a $12,000 account into more than 100 grand. And we did it during all kinds of market conditions, from roaring bull markets to sudden bear markets, political upheavals. As long as all 3 of the asymmetric factors are there, the opportunity to pocket big winners is also there. The more chaos there is, the more we will see big opportunities and catalyst events, which means that with everything that's going on right now, there's never been a better time that I can remember than right now to start using this strategy for yourself, which is why I want to help you get started with this strategy today. So for a limited time, I'm opening up access to my asymmetric alpha alerts. This is the only place where I share my asymmetric trade research like this with a small group of subscribers. Here's how it works. Number 1, I use a combination of macroeconomics and technical analysis, which is top down and bottom up, to find the best possible trade setups. These are places where I believe that perception to reality gap is the biggest and the potential return is the highest. Then I do my own analysis of each opportunity. I find the simplest way to play them for big gains. Remember, I'm looking for trades where I can bet pennies chasing $10 bills. Next, finally, I just send you an email and a text explaining what I found. I give you the exact instructions on how I'm playing them, entry prices, my target exit prices. I even spell out what I see as the urgent catalyst that could send the trade soaring. And I will show you special ways that you can minimize your risk on each opportunity when you go to place your trade. I'll show you how to use and not use stops in order to limit your risk on each trade, how to do that appropriately. I'll show you the different ways to enter and exit positions to maximize your profit and loss. I will show you how you can make these trades even inside of a retirement account. I will show you how to use this strategy to hedge against a falling dollar, inflation, a stock market crash, and much more. Look, these trades have helped some of my subscribers take home massive returns. I've personally used them to take home several big returns in my own account, from a 733% play on market volatility in a little under a month, a 1,068% return on Carvana in about 2 weeks. And I even took home $500,000 in 9 months on one single trade using this strategy in my own account. I've alpha tested it, I've beta tested it, and now I want to start sharing some of these trades with you. I'll tell you how much it costs in just a moment and why I've lined up such a big discount for anybody who joins today. But first, let me answer a few questions about this program. Number one, are we shorting any stocks or buying on margin? No. In my opinion, shorting is too risky. When you short a stock, it means you have to borrow the shares, and many times you have to pay an interest rate fees just to borrow the shares, and then you sell them, which means your potential risk of loss is actually unlimited because you may be forced to buy them back at any higher price. So instead, we use options, specifically out of the money options. You may have heard of options before, and while some types and strategies of options trading can be very risky, and there are certain strategies that I certainly never recommend. With the kind of options trading, the strategy that I use and that we use, your risk is always limited only to what you spend on the trade, which means your potential upside is virtually unlimited. In fact, after Nassim Taleb realized just how much money he made during Black Monday, he said, "That's when I realized out of the money options were extremely explosive." Jamie Mai, he's another guy whose firm took home an 8,000% return during 2008. He said he used these types of options so much because buying out of the money options provided the best way to express the trade. He said these types of investments provided a tails I lose a little, heads I win huge scenario. That's what we are looking for. And it's as easy as buying a share of stock once you know what to do. And it's even better, in my opinion, because these options cost very, very little compared to buying hundreds of shares, which brings me to my next question. Do I need to have a lot of money to get into these trades? The answer is no. You can get into some of these trades for as little as a couple $100s, but that's because we're not shorting any stocks. We're not buying anything on margin. We're not doing pattern day trading, anything like that. So you don't need to have a lot of money to get into one of these trades. You can get into each trade for sometimes as little as a couple hundred. That's the beauty of this kind of trading. You can scale it up, you can scale it down based on the size of your portfolio. If you look at my MicroStrategy trade as an example, let's say you had started with a $20,000 portfolio and you had invested just $500 into that trade. Well, then you'd be sitting on an $8,375 gain from that. That would be about a 41% gain. But if you had a $200,000 account and you invested the same proportion, then you'd be sitting on 10 times, a little over $80,000. Either way, that single trade would have increased your entire portfolio value by 41%. So it doesn't matter how big your portfolio is, but since these are more speculative investments, I do recommend that you have a funded account with at least 20 grand, because that will let you take advantage of more of the opportunities, even if you are investing only a few hundred at a time. But my point is, it's not the size of the account, it's the rate of the return that matters here. So you can get started with very little. The next question is, does Asymmetric Alpha Alerts also get me access to Heresy Financial University? The answer is yes. Some of you know that I've been creating financial education courses for a long time. And so let me cover some of those bonuses that you're going to get access to. I've got a 148 module course on portfolio allocation that teaches you what to do with the rest of your portfolio outside of just trading. I've got a 13-hour course that teaches you how to trade options if you've never touched options before. I'll walk you through how to do it. And I'm adding new stuff all the time. And the feedback on these courses has been tremendous. People have said things like their portfolio is booming thanks to what they learned. They're grateful for the help with their retirement accounts. They made enough money on one trade to pay for their entire course. I think the opportunity I've talked about today could be my biggest project yet. And that's because it's the only place where you're able to join me and a small community of people as we target these asymmetric trades. These are trades that have personally handed me gains as high as 1,793% in as little as 11 days. In fact, I'm so sure that this research service is the perfect complement to every other course that I've offered, that anybody who accepts my invitation to join Asymmetric Alpha Alerts today will get the entire Heresy Financial University library thrown in completely free. That's all my course is. Everything I've created, from how to trade options, buying gold, bear market investing guide, much more. It's all broken down, very simple, easy to understand lessons that take you from beginner to expert. If you add it all up, that's nearly $17,500 in value that you get today, thrown in as a bonus, completely free, just for signing up for Asymmetric Alpha Alerts. But you will get access to a lot more than just those courses, the university, because this isn't just about the setups I'm looking at. It's also about joining a small group of like-minded people who are all trying to do the same thing: grow and protect their wealth during times of crisis. We already have hundreds of members that are asking questions, tweaking their portfolios, scanning the markets for asymmetric trades. This gives you a massive advantage as the year of the asymmetric trade plays out. You can think of it kind of like a private investing mastermind. But instead of paying thousands for it, you get access to it for free once you sign up for Asymmetric Alpha Alerts. But in case you have any questions left that can't get answered by the community, I do have one more bonus for you. Because in addition to getting all the hundreds and hundreds of lessons in Heresy Financial University, private community, you also get access to a monthly live call with me. Because once a month, just for members, I host a live call where you can hop on with a small group of other subscribers and I will answer all your questions. In fact, for anybody who joins tonight, we're hosting the next one tomorrow. So any of your questions coming in fresh, coming in new, I'll be able to walk you through that tomorrow live. It is a live fire Q&A. You can just type your questions in the chat and we go over them live. And it's all about the trades. It's all about the market. It's all about everything that everybody is doing together inside. Now, I can't give you personalized investing advice because I'm not a registered financial advisor, but I will talk general trading strategies and tactics, what I might do given certain situations, and to give clarity to any confusing economic issues, trading issues, and I'll even keep you updated on potential threats and exciting new opportunities that I see in the markets. And if you're not able to join those live, I even provide an opportunity for you to submit questions ahead of time, and I answer every single one that you can watch the recording and the replay of them after. Again, the next one for anybody who joins tonight, we're doing that tomorrow. This is as close as you can come to having somebody like me in your living room answering any questions you may have. Plus, as we talked about before, you're going to get the details on all 4 of the trades that we talked about today. That's the Black Swan trade with the full trade details. The Gray Swan trades, this includes the names, the tickers, entry prices, the target exit prices. That is 4 reports complete with the details just for signing up today. So how much does it cost? You're getting Asymmetric Alpha Alerts where I will be giving, you'll have access to all the trades that are brand new, currently open, and every trade as it comes out. And I usually send out a couple per month. You'll get access to all the archives so that you can review all the past trades, even the closed ones, past performance as well inside the portfolio. You're going to get access to the Gray Swan trades that I mentioned today, the Black Swan trade, all of the lessons, all the courses in Heresy Financial University. You're going to get access to the community and the monthly live stream masterminds that I do once a month. And the next one is happening tomorrow where I'll get you onboarded and up and running. Right now, the price listed on my website for this is $3,000 a year. That's just for Heresy Financial University alone. That's already extremely discounted. It's a bundle of just the courses that I put together for somebody who wants to get all the education. When you add in the Asymmetric Alpha Alerts, where I'll be emailing you regularly and texting you regularly with new asymmetric trade setups, the community feature, the live Q&A calls, I could add in a $3,000 on top of that, no problem, bringing the price to almost $6,000 a year. And even at that price, it would be a steal because getting in on even a single winning trade could pay for that and then some and change your life. But since you were willing to hop on a call tonight, learn about this strategy before signing up, and because you stuck around to the end of the call, I'm going to do 3 things for you right now. Number 1, you can join Asymmetric Alpha Alerts for just $19.95. That is $1,000 less than what it costs to join just Heresy Financial University alone. Number 2, when you join, you're going to get access to the entire Heresy Financial University library completely free of charge with all the features and the benefits like the community included. And as I've shown you, adding in asymmetric trades to my own personal portfolio has been a game changer for me. I've been able to take home several triple digit and even quadruple digit returns using this strategy. And with many of the trades you're going to get from me, I will have my own money on the line. In fact, so far to date, I've never sent out a trade that I'm also not personally participating in. I can't actually promise that I always will, but if I'm not in the trade, I will tell you. And so far, I've been in every single trade. So you know I believe it works. I know that everyone who's on this call doesn't know me, especially personally, and they may be nervous to give a strategy like this a try. That's why I'm going to make it as easy as possible for you to take me up on my offer by giving you a low risk way to try the service. I'm aiming for at least 6 plays in the next year that have a 500% plus profit each, and at least 1 play that has a 1000% profit. If I come up short, Or, to be honest, if you're unsatisfied for any reason at all you have to do at the end of the year is email me and I'll give you another year completely free of charge access to the entire Heresy Financial University and another year of asymmetric alpha alerts, no cost. You'll get all the bonus content, complete access, and you can continue hopping on the monthly masterminds, all free of charge for a whole nother year. But very few people ever take me up on that. I think you're going to be very happy with what you find inside. Remember, a single winning trade could pay for your subscription for an entire year and then some. That's exactly what happened for all these people. Why couldn't it happen for you too? With the community feature, Asymmetric Alpha Alerts, the live calls that I do inside of Heresy Financial University, in order to make sure that everyone has the best experience, I can only let a few hundred people in at a time. Like I said, the next monthly live stream for getting you guys onboarded is happening tomorrow. And if there were thousands of people on that call, it would not be a good experience for you. Last time I put on one of these events, I had people emailing me after the deadline asking to join. This time I'm limiting it to just 500 people, no exceptions. So I don't want you to feel pressured. If it's not right for you, it's not right for you. With the value that I'm offering today, the $1,000 discount, the asymmetric alpha alert trades, and the guarantee, I made it as easy as possible for you to say yes. So the way I see it, you have two options. Option number one, feel free to leave this page. Ignore everything I told you. Ignore the fact that the next few months could go down as one of the most volatile in history. And ignore the fact that these asymmetric trades are one of the best ways that I know how to profit from the chaos. And feel free to ignore the fact that this might be your only chance to get access to the Heresy Financial University while getting asymmetric alpha alerts. But if you listen to me for this long, I think you realize that what I'm offering today is beyond anything that you've seen before. It's a way for you to join a community of people and get my research as we target these asymmetric trades together. Which brings me to option number two, which is to take one simple action, one that will not only help protect yourself from volatile markets, but it could change your financial future in the process. Just to recap, here's everything that I'm offering you today. Access to asymmetric alpha alert trades, where I will update you regularly with emails and texts with new asymmetric setups in the market as they appear. I send out a couple per month. Access to all of the asymmetric alpha alert archives, which is all the past trades that I've ever sent out for you to review every single one of them. Access to the Gray Swan trades that I've talked about today, complete with buy up to prices and exit prices. Access to the Black Swan trade, where you get all the trade details, my research. Access to all the Heresy Financial University courses in the training library. Includes the portfolio allocation masterclass, technical analysis, options, access to the community, and access to my monthly live stream masterminds. The first one is tomorrow to get you onboarded and ready to go. Like I said, I could not have made it easier for you to say yes. You've seen the evidence, you've seen the proof, you've seen the screenshots, you've seen the reviews. I have 4 plays waiting for you as we speak. Now you just have to decide. Are you going to be one of the people who sits on the sidelines this year and watches these opportunities play out? Or are you going to start changing your life in 2026? To secure your spot, all you have to do is click on the link that is in the chat, or you can type it in the search bar yourself. It's go.heresy.financial/Black Swan trade. Your browser, you might need to put in that first part, the https://. It's go.heresy.financial/Black Swan trade. You're going to be taken to a page where you can review all the details of my offer. And to claim the discount that I'm offering today, this is very important. Please do not forget this, because every time I have at least one person that doesn't put in the coupon code for some reason, make sure you put in the code Black Swan before you click checkout. Type in the word Black Swan, click the apply button. You'll see the price goes from $3,000 down to a little under $2,000. That way you get your discount code. Do not forget that. And then check out. And I hope to see you on the inside. All right. Not going anywhere. I'm going to announce the book winner here for our Black Swan book as soon as my host sends it to me. Give me 1 second. Okay. Michael from Salt Lake City, Utah. Michael from Salt Lake City, Utah. And the first part of your username starts with Money Mike. Um, so we will email you and get in touch with you to get the details so we can ship this collector's book to you. So congratulations, Michael, and hope you enjoy it. All right, now we've also collected some questions from you guys as the event has been going that I'm going to start going through kind of one by one here.